Hi, Eddie. How are you?
Hello, I'm good. How are you doing today?
Good, good.
Good.
For their most important purchase of their life, purchasing a home,
Mhm.
and how can they prepare financially to qualify for the loan?
Everybody's situation is different and unique. People are always waiting for everything to be perfect, right? And as we know, that's never going to happen. Life sort of happens. But the biggest challenge for most people is their debt to income ratio, making sure that all expenses are kept in check. And then the second most popular is saving for a down payment. Put together a budget if you haven't already. Look at your expenses. Take a moment to write everything down. What are we spending every month? Where can we save? And make a commitment to put away a certain amount every month. If you've already got a couple $1,000s put to the side, that's a great start. And there's many different programs out there that can assist you in your down payment. We can always negotiate to have a seller contribute to assist in your closing cost. But I would say most importantly, make sure that you are living within your means. But at the same time, you don't want to put something off that could possibly save you money in the long run, if that makes sense. Manage and budget for the home that you're looking for, and make sure that when an opportunity does arise that you're doing the best you can to be ready for that. The best way to measure and determine how ready you are is to reach out and speak with a mortgage broker so you can determine what the monthly costs are going to look like. Here's roundabout what I should expect for my down payment, closing costs, etc. And we'll put together a roadmap for you to allocate funds if need be to help ease that weight of purchasing a home.
You did mention closing costs. Some new first-time buyers, they don't know necessarily about the closing costs. They just think about the down payment, and they're not thinking about a closing costs. How much is the closing cost around? What's the percentage for that?
Again, every situation is going to be a little bit different, but I would say it would be safe to expect average closing costs are going to be anywhere from 2 to 6% of your purchase price. That can vary significantly based on a few things that we touched on earlier, how much we negotiate to have the seller contribute. As we've discussed previously, we are in a buyer's market. So a lot of sellers are contributing towards closing costs, which can be very helpful when you're making your purchase, when you're purchasing a home. Every little bit is going to help. So if we can work together and team up to negotiate and strategize for the seller to contribute towards your cost, that can lessen the weight. But I would expect anywhere from 2 to 6% of the purchase price for your cost.
Eddie, what is the cost of the mortgage point? And how much does it help towards the monthly payment of the home?
1 point equals 1% of your loan amount. And generally, one discount point would buy down your interest rate from anywhere to 1/8 to 3/8 of a point. That's going to vary based on the market, the lender, current conditions. Because discount points are considered prepaid mortgage interest, in most cases, that is tax deductible on your income taxes. You always want to consult with a tax professional for tax advice, but generally speaking, mortgage interest is tax deductible. Depending on what it is we're trying to accomplish and how much money is available, how much we're able to negotiate that the seller contribute, buying down your rate can be a great way to not save you in the long run. Every mortgage that I've personally gotten, I've maxed out my points and brought down the rate as much as possible. We want to look at what's currently happening in the market. If we foresee that in the future that it's expected that rates would drop, then maybe you don't want to buy down the rate as much, right? Because you don't want to spend thousands of dollars to buy down an interest rate, and then 6 months from now, we see that interest rates went ahead and dropped anyway. If that expectation is in the next year or two, then maybe it'll make it a little bit more expensive, especially if the seller is going to pay for it. Then it's not as difficult as a decision to be made.
Correct. And then you did mention about rates going down. I know rates went down a little bit, right?
Yes, we have
Mhm.
recently seen a bit of a dip in interest rates, which is great. They are still hovering a bit higher than they were 2, 3 years ago, but obviously, 2 to 3%. As much as I'd love to see those days come back, I don't
Oh,
know.
yes.
I don't know how much in the foreseeable future, or if
We
ever,
will
that
see
will
that.
return. I'd love
Correct.
for it to happen. That'd be great for business.
Yeah, and then that's another thing. Like if a person waits, for those rates to come down, but then like let's say a home is worth 400,000 and then they want to wait and within a year it's now worth 450, but the rates never went down. It will be best to buy it, and then if the rates do come lower, they can refinance. It will be
Exactly.
a
And that's a great point. Anyone that has studied the market for any length of time as far as home prices over the years, the data is pretty consistent. You're going to have your ebbs and flows and your dips and plateaus, but generally over time, if you look at the past 5, 10, 15 years and what has happened to the average cost of real estate, there is no doubt a consistent increase in property values. So you hit the nail right on the head. We can secure a home's price at the moment of purchase. Rates are going to do what they do. If you're able to get an interest rate now you can afford, and it puts you in a monthly payment that is at or close to what it is you're paying in rent, to me, that's a no-brainer, because the big difference is you're going to be building equity in real estate that's going to increase in value over time. If rates happen to drop in the next year or two, fantastic. Well, then we can refinance and make that even better for you.
exactly.
But the bottom line is, regardless of whether you got a 6 or a 2%, if you're going to gain thousands of dollars in equity over the next 5, 10, 15 years, why would you want to block yourself from that blessing?
Exactly. I agree. What is the difference between pre-qualified and pre-approved?
This is the good one. The basic difference between a pre-qualification and a pre-approval is that a pre-approval has been underwritten, meaning the lender's underwriter has viewed your credit, income, assets, and they have issued conditional approval stating, based on what we've seen, here's what we would need to close or fund this file. A pre-qualification, on the other hand, can vary. I've seen in some cases different banks or brokers that I will not name issue a letter and they haven't really viewed much of anything. They're just issuing letters. It used to happen all the time with very large lender out there. And again, I'm not going to name names, but I think some of you watching probably know who I'm talking about.
Right.
It got to a point where it was so bad that a lot of realtors, when they saw letters from this particular lender, they would require that their client get a second opinion and say, look, you can use this lender if you'd like, but I've had a lot of bad experiences, so I need you to run this by someone else to make sure that you are in fact pre-approved, which goes back to another point. Although, as I said, a pre-approval technically has been viewed by underwriter, not every underwriter is created equally. So if you've got a particular lender who's got a reputation of doing certain things, good or bad, then that's to be expected. At the end of the day, a letter, whether it be a pre-qualification or a pre-approval, is only as good as the people that have issued it. And that's why I always recommend that whoever it is that you're working with, make sure that you've done your homework on that individual, especially when it comes to a mortgage. Yes, I work with and am a part of the Home Equity Network, or H Mortgage, but I'm Edward Foy. I'm going to be personally dealing with your loan. So make sure before you entrust this huge investment with me that you do a little research. Do a quick Google search, Edward Foy Mortgage, or whoever it is that you plan on investing your time and energy with, because the last thing you want to find out is that everything that you spent your time, money, and energy on was built on a house of cards, right? Look at that person's reputation. What do other people have to say about them? What are their experiences? And then kind of go from there and say, okay, this is somebody that I can trust and I'm going to work with, because that letter, it can look great. It could be on the pristine letterhead. But at the end of the day, if you're dealing with somebody that doesn't have the experience, Sometimes, all too many times. If it happens once, it's too often. The bigger the lender, sometimes the more often it occurs where we see these letters being issued and things were missed because they're just not handling business as they should.
Thank you so much for that information, Eddie. I appreciate it. Once the pre-approval is loan, how long does that last?
Generally, a pre-approval is going to be good for about 60 days.
Mm-hmm.
Sometimes when people hear that, they're like, oh, goodness, every 60 days I got to do this over again. It's not really that complicated. If 60 days go by and we have not yet found a home or closed on your loan, all we would need to do is get updated paycheck stubs, a new asset statement, and sometimes we might run an additional credit pull, whether it be a hard or a soft pull, just to make sure that everything is where it was previously. It's not a whole lot of documentation that has to be resubmitted and things like that. It's kind of a refresher, just making sure this is still going to work, because a lot of things can change over the course of 60 days. Interest rates could go up, go down, property prices could go up or down. You might have gotten a new vehicle, etc. All those different variables could occur. Well, let's hope not. Things can happen, life happens. We just want to make sure that if you're still on the hunt for your home, that we can still get you everything we discussed, because anything that has changed could impact your approval and or how that loan is structured. That's why every 60 days, we just want to refresh it and make sure that everything is still as it was.
Great. Well, thank you so much, Eddie. I appreciate all your time and the information.
Likewise, it's always a pleasure.
And if you guys want to reach out to me with any questions, concerns, you can call me, text me, 941-348-9831. And Eddie, how can they reach out to you?
You can call or text me at 281-304-6353.